if I'm a retail investor, should I care about Gift City today?
It's a misnomer, yeah, that Gift City there is zero taxes. WhatsApp universities and everything, they think that it's tax free.
The gateway wasn't really in the hands of India. It was more Dubai, Mauritius.
But one could say that Gift City is probably the safest and most secure way now to invest into India if you're someone looking to invest from outside the country.
Onboard those NRI clients, it's a very big hassle. Generally, the entire onboarding process takes anywhere between 30 to 45 days. It can happen as quick as in 2 days. Yeah.
Hi everyone. Thank you folks at Phillip Capital for doing this conversation with us. Before I start talking about Gift City, why don't you guys just briefly tell us what you do? What does Phillip Capital do? And how are you involved in Gift City slightly? And then maybe we can just start talking about it.
Sure. Thanks, Kashish, for this opportunity. So just to maybe touch upon what Phillip Capital is to start with, that way, of course, we are a very large global behemoth. Yeah, we are spread across 15 countries globally. We are headquartered out of Singapore, and we head to our 50th, in fact, 50 plus years of operations globally. Here in India also, we are into our 25th year of operations. Yeah, so that way, very large global company into financial products and services. Yeah. Here in India, of course, we do a lot of business with institutional clients, HNI clients, yeah, and to some extent too with retail clients as well. So my name is Nishit Shah. I head the PMS desk out here at Phillip Capital in India. I've been part of Phillip Capital now for more than 10 plus years. So I've been heading the PMS desk, overall look at the fund management part as well as far as the business is also concerned. Yeah.
I'm Ankush. I'm part of Nishit's team and of course I've been with Phillip Capital for the last 7.5 years now. Of course, part of the team of the PMS and the Gift City.
Help me understand, why does Gift City even exist? What problem is Gift City trying to solve that, our existing financial system couldn't?
So see, Gift City was the brainchild of Mr. Modi when he was the Chief Minister of Gujarat. That was the earlier. So of course, till now, all of us have heard about Mauritius. So a lot of money, foreign money that used to come into India, that used to be through Mauritius, Singapore, Bermuda, and all those offshore jurisdictions. Yeah. So we did not have any offshore financial kind of a jurisdiction here in India. So that was what Mr. Modi's plan was when he was the Chief Minister of Gujarat. Of course, when he became the Prime Minister, this took more shape kind of a thing. And that is where Gift City came about. Of course, Gift City, though technically it is in India, it is between Ahmedabad and Gandhinagar, but it's an offshore jurisdiction. So basically, technically, it's an SEZ kind of a thing. Yeah. So whatever happens there happens through a different regulator. So in the case of Gift City, IFSCA is the regulator kind of a thing. Yeah. So it is an independent, I would say a small city kind of a thing. Yeah. So basically the idea is that if money is going to be coming into India or maybe going outside India, then we need to have a certain kind of a hold over it. And that is where the entire idea about Gift City came into place. Yeah. And since it was launched, I think it has become very popular. Today, a lot of money that is coming into India or maybe going outside India as well. Yeah. Of course, it is more popular for money to come into India. It is gaining a lot of popularity.
I'll ask an even dumber question. Why is it that money coming inside of India or outside of India can happen through, institutions like NSE, PSC? Why is it that we need something in offshore? Why do we need that in the first place?
So see, basically when big foreign money that comes in, they would want a hassle-free kind of an investment vehicle. Okay. So that's why generally a lot of money that used to come into India through FIIs or FPIs, what we call them right now, they used to use kind of countries such as Mauritius or Singapore or Luxembourg, because therein those jurisdictions have, of course, a certain kind of an advantage because you can do a lot of it offers a lot of flexibility. Second, it also gives you a certain kind of a leeway as far as taxes are concerned. Yeah, it offers you a lot of to do multiple things under one registration. So that is what the main purpose of all this thing is. Of course, some of them became known as tax havens. But now, of course, fortunately for all of us, all of them work on the similar kind of a tax kind of a structure. So it is no longer that maybe a Mauritius or a Singapore has an advantage, or a gift city or a gift city has an advantage of anyone else. Yeah. So all of them, they get taxed in the similar kind of a structure. Yeah. But a lot of large money that comes into, they like to come to a fund structure. So if they directly come into India, then they need to get registered individually. And to get registered individually, it's a lot of paperwork, a lot of hassles. Yeah. So that's why a platform, or maybe kind of a regulator, when it comes in between, it offers them a lot of comfort.
So, Nishit, or maybe Ankush, you could help me understand. You talked about flexibility. One specific example that you gave was that for a foreign player to, let's say, invest in India, they'd have to get themselves registered in India, which isn't as convenient. Can you give a few more examples which helps me solidify and understand why do we need something like Gift City in the first place? So obviously, tax havens ka bhi aapne bataya. Maybe just drill down a bit. How does the tax differ if, let's say, we do it through offshore, or let's say if we do it through NSE? How does that look like?
Kashish, let's take an example of an individual investor. He's a foreign national. Now, today, if he wants to invest into India, he decides to invest directly into India. So he'll first need to do a lot of paperwork. First, he need to apply for a PAN card. Then he need to be registered himself as an FPI, have bank accounts here in India. So it's a lot of hassle. And now a foreign national, individual investor wanting to invest into India, first he'll think that why should I take a PAN card? Why should I start filing my tax return here in India? So suppose today, if I want to invest into maybe US, I do not need to apply for a kind of a PAN card, or maybe the local tax identification number out there, or maybe. So it's a very big hassle kind of a thing. So that's why they like to come to a fund structure or jurisdictions like this. So for them, investing into India becomes quite simple. So let's take another example of an NRI client. Okay, now today an NRI client also wanting to invest into India, it becomes quite difficult, because he'll also have to have a PAN card, maybe an OCI card. He'll need to open a savings bank account, a PIS account. Yeah, he'll have to file for his returns and all those things. Yeah. Now with Gift City kind of a structure, all this thing goes away. He does not need any of that. Onboarding becomes quite easy kind of a thing. So that is one of the big advantages of a structure like a Gift City. So yeah, all this entire hassle goes away. Second thing, you spoke about taxes kind of a thing. Yeah? So taxation wise also, again, when you invest directly, you have to file for your returns here in India. But when you invest to a fund out of Gift City, the fund pays the taxes and all those things. Yeah? So as an individual investor, you do not need to worry about taxation in India or in Gift City. Now the tax advantage that a foreign national or an NRI have when they invest to one of this jurisdiction is, if we are doing any derivative trades, derivatives are not taxed kind of thing. Yeah? So that is something how we Indians have to pay any capital gain tax on derivatives as well. As a foreign investor, you do not need to pay any taxes if you come to one of this jurisdiction. Other advantage is, if you are investing into mutual funds to one of this jurisdiction, then also the tax advantage is there. So if you invest as an NRI in India, okay, you invest into a mutual fund unit, you bought at 10 rupees NAB, you sold at 12 rupees NAB, a TDS gets deducted and you get the balance money. Of course, you'll have to maybe then show that why TDS should not be deducted and all those things, but it's an additional paperwork. But when you invest to a jurisdiction like this, the fund, since it is taking care of it, if you're investing into mutual funds, they will take care of the entire thing. Yeah? So then you won't be paying any capital gains. But again, I think, Kashish, more than the taxation, I think it's the ease of investing that is more important, rather than taxation. Again, for taxation, it keeps on changing. So I would strongly suggest to always consult someone before you go ahead and make that investment decision. Yeah? So for me, taxation is not a very big. So today, everyone is sold on India story. In fact, NRIs and foreign nationals also know a lot about India story than we do. It's just that the vehicle for them to invest into India. So that way, Gift City makes that investment process very simple for them. Yeah.
Standardizes the number of people who we can actually approach, NRIs, maybe even foreign nationals in instances. Foreign nationals, obviously, if they came to individual routes, they would be having a very difficult time in terms of some countries may not have even been allowed to invest because of multiple data. So Gift City kind of standardizes everything and makes it a level playing ground.
So say suppose we are running a PMS, almost 30% plus of our AUM is NRI clients. Yeah. Now to onboard those NRI clients, it's a very big hassle. Yeah. So generally the entire onboarding process takes anywhere between 30 to 45 days. There is no kind of lag from our side because the number of signatures are 50, 60 signatures. Yeah. They have to open a bank account, a PIS account, then a trading account, then a demat account, and then finally a PMS account. Of course, we handle the client throughout the journey. But if anything is going to take such a long time, yeah, see, because 50, 60 signatures, you clearly mark it for the investors to sign, but then also they're going to maybe they're going to miss out on something. Second time, they might sign with a separate, maybe a different thing. First time they sign with a blue pen, second time they sign with a black pen. The banks are going to reject the form. So it's a very big hassle. Since we have launched the Phillip India Billion Opportunities Fund in Gift City, onboarding of NRI clients has become very simple. Onboarding can happen as quick as in 2 days. So against 30, 45 days, onboarding here is almost like 2 to 3 days at max. Yeah, and very simple kind of documentation. Now a lot of second generation, third generation guys, they don't have an OCI card. So to develop a link, and if they want to come to the traditional route of NRE, NRO account, yeah, they need to have an OCI card and everything. But in Gift City, that is not the requirement. Okay?
So honestly, when I was reading up on it, the first thing that Google threw me was it just makes everyone's lives easier. But I was unable to have a full grasp on what those words meant. Now that you gave examples, right? Something as simple as a process of onboarding an NRI cutting short from 30 to 45 days to 2 days. That is a lot of pain solved for folks like you who are trying to solve and build wealth solutions for your clients abroad and also for them. So honestly, that helps. Moving on, you mentioned about the regulator, right? Here, the regulator is different. How are they different? What I'm primarily wanting to ask is, what's the vision that they have? What's the philosophy that they have? How do they differ from, let's say, SEBI or RBI? How do they interact with them? Do they fall under SEBI or RBI's purview, or they're totally separate? Just a bit on that as well, so that I can better understand how is it being regulated.
See, unlike India, wherein we have got different regulators for everything, in Gift City, we have got a unified regulator. And they're very much forthcoming. Yeah, they want to expand, they want to make Gift City very popular. So with a lot of products and services, they are very liberal. They are also looking at global parlance in the many ways, kind of a thing. And they're getting a lot of new kind of regulations and products and services onto the Gift City platform. So that way, I think since it's a single regulator, it makes a life a lot easier for operators like us as well. So that is one of the biggest advantages. Of course, for an Indian resident who wants to maybe send money to Gift City, of course, for us and maybe an RBI comes into play because we be remitting money through the LRS structure. But once you are in Gift City, it's only a single regulator that you are interacting with. And of course, they have taken a lot of kind of influence from maybe what is already happening in India through SEBI, RBI and all those things. And they're very stringent as well. They don't want a bad name for Gift City. So till now, I think they have done a fabulous job. Yeah, what they have been able to achieve in such a short period of time. Yeah, we have seen a lot of global offices are setting up their accounts in Gift City. Yeah, we saw in between, heard about how maybe a large Abu Dhabi family office, or maybe someone because of the recent Middle East crisis as well. A lot of NRI clients have started opening bank accounts out there in Gift City as well. Yeah, so I think that way it's there to grow. Yeah, see, another very big advantage of Gift City is cost. So today, when you do, say, suppose if we try to do a fund structure in Mauritius or Singapore or maybe any, the costs are very high. Okay, I'll tell you the legal cost only. The rest all, of course, itself is very high. Today, if you deal with a legal counsel in maybe Singapore or something, yeah, therein they're going to charge you in dollars. Because Gift City is here in India, well, cost as a operator or maybe as a fund operator also becomes quite less kind of a thing. Yeah? So that is availability of skilled manpower is also quite easily available kind of a thing. Yeah? So these are all advantages of additional advantages of Gift City.
So, if I understand it correctly, and correct me if I'm wrong, before Gift City, the way for anybody to bring money in India or outside of India, the gateway wasn't really in the hands of India. It was more Dubai, Mauritius. But now with Gift City, we as Indian have more control over the gateway of capital flowing in and out, therefore making everybody's lives easier. Did I understand it correctly?
Yeah, perfect. See, gateway for incoming money, I think they are very legal. Okay, it's wherein outward kind of remittances, that is there wherein they will have a proper gatekeeping activity. A lot of money was coming into India through different jurisdictions. So think of Gift City as maybe a DIFC of Dubai or a Singapore or a Mauritius. I think that way it makes a lot of sense.
I think it's developed also over the years that when we would have started, we would have had to explain managers, maybe possible clients as to what Gift City is. And since it's evolved and there's been so much information, especially by the regulator also, there's been so much awareness activity. I think that hesitancy is not there because we've shown proof of concept. Now it's doing so many volumes across various products, whether it's inbound or outbound. So now I think even foreign nationals are kind of more comfortable in terms of looking at Gift City.
Got it. So now I'll actually get into the nitty-gritties of the workings of Gift City, and how I look at it is from two sides, as you explained, money coming in and money going out. Let's talk about, first money going out. So let's say Gift City, obviously LRS limits still apply to Gift City, but let's say pre-Gift City era, when money was supposed to go out, how inconvenient was it? What was the process like? And now what has the process being replaced with? Obviously, you mentioned the timelines have shortened, right? If let's say I am somebody who has enough disposable income and I want to have exposure to non-Indian equities per se, what was options for me before Gift City, and now what is it now?
So see, of course, before Gift City, I think one of the easiest options for us earlier was the local mutual fund routes, wherein they used to invest into global funds. So it was a fund of fund kind of a structure. So wherein maybe you invest into a Hang Seng ETF or maybe a Mirai Fang kind of an ETF or mutual fund units. I think that was there. Otherwise, to invest into global securities was a slightly difficult activity until and unless you had large money. Then if you had large money, then maybe you open an account in Singapore or maybe in Dubai or directly into US. But for smaller ticket size, it did not used to make a lot of sense kind of a thing. Because see, again, we are an MNC. So we used to do this before Gift City as well, wherein if one of our investors was wanting to invest into global securities, we used to take him to a Singapore kind of counterparts out there and help him open the accounts out there. Of course, it was still easier, but it was generally meant for higher ticket sizes. Then of course, we had got a couple of Indian-based platforms which had a chaperoning arrangement and which were kind of easing this. They're providing this solution for Indians wanting to invest into global securities. Now with Gift City coming in, so again, what we have done at Phillip Capital, we are kind of offering access to US listed equities to our platform. So it becomes quite easy, for you to transfer even small money and start investing into global securities. It has become very easy. So even for smaller ticket sizes, it now makes a lot of sense. Earlier, it was maybe meant for larger ticket sizes clients, maybe $100,000, $200,000. But even now, for maybe $5,000 or maybe $1,000 also, you can do that.
Adding on to what Nishit also said, is that there were not too many regulated asset management companies through India. Now you see, of course, Phillip as a house has a global PMS. There'd be so many reputed asset management companies who set up their own vehicle investing into
global securities.
Maybe directly into global securities, maybe into a feeder fund. And probably before that, you would have to do it through Mauritius again, which would be a very difficult task in terms of cost, in terms of getting access. Now I believe it's the ticket ticket size is also affordable for investors in India looking to kind of take access. It's just about where they want to invest now. The options are all there for everyone.
Why don't we just, double down on this feeder fund thing? I've seen AMCs being very aggressive launching these feeder funds. So trying to understand how does it differ from, I don't know, maybe typical NASDAQ FOF or a S&P FOF that AMCs were launching in India before this. How does the structure differ? Again, operationally, does this make the life of a fund manager or let's say a wealth manager easier? How does that look like?
So see, of course, the local funds that are there are certain RBI limits which come up. And that's why as of now, as we speak, kind of a thing, a lot of the funds are not accepting new money, because they already hit the RBI limit. So then, but as an investor, you want global exposure. Then you could invest through GIFT City. Of course, the LRS limits apply out there, individual LRS limits, but I think those are quite liberal, $250,000 per PAN card per year. So then you can remit money. A lot of AMCs, as you rightly mentioned, are starting with a feeder structure out there. So you can invest small amounts as well and you start getting exposures kind of a thing. So that way it is a much easier route as well. And once you invest into dollars, because GIFT City, your investments are going to be based in dollar. Now, unfortunately, Indian currency is a depreciating currency. So on an average, even if your money is there, kind of a thing, you maybe let it be in a liquid fund, or I'm just giving an example, kind of a thing. Then also, on an average, Indian currency depreciates by 3 to 4%. Of course, over the last 15 months, it's been depreciating a lot, kind of a thing. So you get that advantage. And plus, of course, you get a lot of advantage of participating into global equities, kind of a thing as well. So a lot of fund house. So I think it's just a start, Kashish. I think we are going to see a lot more funds coming up out there, feeder structure, wherein maybe you can have exposure to individual markets. See, in India, we have got only ETFs, Nifty 50 ETF or Nifty 500 ETF. We have got very few thematic ETFs like a banking ETF. But globally, there are so many that even if when you talk about artificial intelligence, of course, there would be an ETF on artificial intelligence, but within AI also, there would be so many of them, kind of a thing. So I think then as we grow, more funds keep coming up, we as a wealth manager or as an investor, getting more kind of options.
And another thing is that compared to the mutual fund route, it would be more for retail individuals paying smaller amounts, whereas for slightly more sophisticated investors, obviously as the ecosystem evolves, it will be open to a much smaller set of investors.
And Kashish, apart from feeder structures, there are PMs. Suppose we run a PMS. There are AIFs which have come up. So that way again, as we were saying, that for HNI clients also, there would be many more options, kind of a thing.
Again, so I still want to, pick your brain on how does it operationally differ. Let's say if I was investing in an Indian MF and they were on my behalf buying an S&P ETF, which was something that happened, I don't know, maybe pre-GIFT City as well. But now all these investments are being routed through GIFT. How does that change the operations for a fund and life of a, let's say, fund manager?
So I will take it up in two cases. As an investor, of course, when you invest into local funds, the mutual funds, it's very simple. You just kind of open up a new folio, transfer, maybe do an SIP. It's easy. When you want to send money to GIFT City, you have to actually remit money kind of to GIFT City through LRS. Then the investment process journey is very simple, similar kind of a thing. Now, as a fund manager, of course, when you do launch a fund in India, there are certain rules and regulations that come up. You convert the fund from dollar to INR or from some currency to INR, then open it to local investors. But there in GIFT City, you can keep it into the same kind of a thing. So maybe cost-wise, I don't know how much difference it would make, but my guess is it would be slightly cheaper if you run it out of GIFT City.
Got it. So again, if you were investing through GIFT City, I am Kashish, I'm trying to invest. Me transferring money to GIFT City will come with those LRS limits. But once my money has reached a GIFT City entity who's investing abroad, then the life becomes much easier compared to a domestic mutual fund folio where it works very similar to any other investment that we make. And then how the money is being again translated from dollars to INRs and eventually returns being reflected in NAVs, that's a problem for the fund manager itself.
Yeah, of course.
Got it. Now, on the flip side, we've talked about money going outside of India and the demand for dollar assets. That's proven for sure. As you yourself mentioned that INR gets depreciated, it makes sense to have that USD hedge as well. Totally makes sense. On the opposite side, when we talk about, money coming in India, my first question remains, what are the key players in Gift City right now who have money coming in India? So is it usually global firms who've also set up their offices in Gift City? Is it domestic funds who are trying to get money in India? What does that look like?
So today, as we speak, I think all the global banks and local fund houses are there present in Gift City. Of course, the local fund houses are more kind of active as of now because they already have an NRI client base kind of a thing. Yeah. So that is where they are offering a hassle-free kind of an investment process for them to onboard into India. Yeah. And I think that's why they have been kind of more active out there on the fund side. Of course, there is everyone out there kind of a thing, but it is the local. Yeah. Of course, what I also understand is a lot of global family offices has also started setting up accounts there in Gift City, yeah, because of the global banks and everyone out there. See, today's India story is quite popular, and especially since the valuations are also corrected, I think it is much more become interesting kind of a thing. Until now, of course, this money was always going to come into India through some other kind of a structure. But now with Gift City, especially NRIs are coming up in big numbers into India. So I would say that it is one more vehicle, but it has made that life simpler. Okay. And since the popularity is increasing kind of a thing, it is going to increase kind of a thing going.
And I guess the structures which would be there in Gift City to bring money would be through the alternative investment, the AIF. Cat 1, Cat 2, Cat 3, and we are doing specifically a Cat 3.
Now, I want to nitpick your brain on the tax end of things. Currently, and I want you to give me two examples of what does tax look like by taking an example of somebody and like an Indian investor who's, let's say, investing in a US stock. What does tax look like through a Gift City route? What does tax look like outside of that? And does that give enough incentive for an individual investor like me to prefer the Gift City route?
I think one thing first I would start like is it's a misnomer, yeah, that Gift City there is zero taxes. So I think, see, the taxes are not there for the businesses for a certain period of time. So the other kind of taxes that is not there is GST. So whatever fees get levied to the client, the management fee or anything, there is no GST. But when it comes to capital gain tax or maybe income tax, it still applies. Now let's take an example. For example, Kashish, you have invested into a Gift City fund which invests into global securities. So whatever income is there, you'll have to report here in India and you will have to pay your capital gain taxes and income tax kind of a thing. So there is no difference kind of a thing. So when you invest into a, say, suppose a Hang Seng or ETF kind of a thing, you will have to pay capital gain tax kind of a thing. Long term, short term, it would depend. Yeah? So similarly, when you invest into a fund in Gift City and there is a capital gains tax, you will have to pay those taxes here in India. Yeah? So it is not that you don't have to pay for tax. Let's take an example of an NRI client investing directly into India. Okay. In this case, what happens is, suppose for example, he is investing into stocks. So he'll have to say, suppose he invested 100 rupees in one particular stock. He sold that stock at 150 rupees. So what the bank will do? Yeah, because when you are investing directly in India, you will have to open a PAS account with a bank. So the bank will deduct the TDS. For example, let's take an example. It was a short-term capital gain tax. So on 50 rupees, 20% is the tax. The bank will be deducting 10 rupees and remitting back the 140 to the client. Now, at the end of the year, that particular client will have to file for his income tax here in India and say that, okay, I had to pay 10% short-term capital gain tax, which has already been deducted. And these are my certain other interest income, and this is the tax filing that I am doing. Okay, so this is what an NRI investing into India directly. Now an NRI investing through a Gift City fund in India. Now for him, all the taxation would be at the fund level. So the fund would be paying the taxes here in India, the capital gain tax, whatever is there, long term, short term. The client does not need to file for any taxes here in India. The client will have to file for his taxes in the country that he is originating from. For example, he is from Dubai, that NRI client. In Dubai, there is no income tax on global income. So he does not have to pay any taxes out there. But say, for example, he's from US. The short-term capital gain tax here in India is 20%. If the fund is also registered in US, say suppose our fund is, we have already taken a registration with SEC, IRS and with individual states. So we will be able to provide him a K1 statement, and therein the tax in US is 25%. Then in that case, he'll have to pay a 5% difference, yeah, in US. But here in India, that entire hassle of TDS, filing for his return at the end of the year and everything goes away. The other big advantage, Kashish, that is apart from the onboarding, the taxation, is reporting. Okay. See, when a client is directly investing into India, his reporting is going to be in INR terms. For example, an NRI client invests into my PMS through an direct kind of a thing. So I am going to report him into INR terms that you invested 50 lakhs. Today your 50 lakh has become 60 lakhs. So your returns are 20%. But so we report in INR terms that 20% is your return. But for client, he'll say, boss, I transferred you the money when the dollar was 82. Today it is 92. So my returns, actually dollar returns are not 20%. Yeah, dollar returns are maybe lesser than that. But when he invests through a gift city fund, his reporting is in dollar terms. So it becomes much easier for him to track his investment as well. So suppose the NAV that we publish for our Phillip India Billion Opportunities Fund, it is post-tax, post-expenses and in dollar terms. So it takes into the consideration the dollar appreciation as well. So for him, it becomes very easy to monitor his performance. Like my 100 rupee NAV is today 115. So I made 15%.
I think that pretty much sums up everything I wanted to know, at least for the starters. I'm pretty sure there are so much more nuances around Gift City. Before we close, let me ask you a blunt question. If I'm a retail investor, should I care about Gift City today? If I'm a retail investor, let's say, who can't afford to invest a 50 lakh PMS ticket size, but who's actively investing through mutual funds, should I care about Gift City today?
See, I always say this, and especially Indian markets over last 18, 20 months has proved this, yeah, that India is going to do very well. But it is not a question of an or that I have to invest into India or global. It is a question of an and. So you have to do everything. Last 15, 18 months, global markets have done very well. Indian markets have not done that. And that's why actually it has become more popular. Wealth managers are also pushing it. Japanese market have done so well. Yeah, US, even European markets, they have surprisingly done very well. So you have to invest. Gift City offers you a very good investment kind of vehicle. Yeah, you can open a bank account there in Gift City as well. I will give you an example. Yeah, I will give you 3 reasons why one need to invest globally. One, of course, is dollar diversification. We spoke about the currency depreciation benefit. Second is global diversification. And third, there are many themes which are not available in India. So today, artificial intelligence, cloud computing, medical devices, all these themes are not available in India. So that's why you need to invest globally. And Gift City offers you that very good structure. Today, you can open a bank account also out there, keep your assets in dollar terms as well, and then invest globally. Okay.
And for the retail investor, obviously, because the RBI limits have been breached for so many funds, there are very few options where you can actually invest into the global market. So again, if you have the ability to, you can access Gift City and then you can access these plethora of options apart from the benefits that Nishit was bringing.
Again, I think what is more important, Kashish, is you have to invest small portion. Today, because global markets are doing well, you do not shift everything from India to global. But that is what unfortunately sometimes happens there, kind of thing. So you have to invest a portion of money. And I think Gift City that way, the vehicle that is there, I think it's one of the best kind of thing, investment vehicles if you want to invest in global securities.
I think the current markets, as of today, we've learned asset allocation a lot more than we should have. We always get lessons.
Okay, so one dumb question again, but the industry limit for MFs to invest, we've reached that, and which is why a lot of fund inflows, a lot of MFs have stopped inflows into their schemes wherever they had international exposure, right? Or they're just cutting exposure there. That thing does not impact if the same AMC was setting up a fund in Gift City.
Yeah, right. It does not.
Fair enough. Okay, one last question before we wrap up, and I expect both of you to give your separate answers. Since both of you have been interacting with clients on both sides, money coming in, money going out, what's one thing that most people misunderstand about Gift City? And after having these conversations, few things that have always popped up which has confused people about Gift City. And through this platform, maybe you'd want to clarify that once and for all.
I think taxation is one thing. A lot of because sometimes of WhatsApp universities and everything, they think that it's tax free. Yeah, so I think that is one misconception a lot of investors have, kind of a thing, as far as Gift City is concerned. But yeah, otherwise, I think there is no issues that we face when we talk about Gift City. In fact, a lot of these guys know already about Gift City, both about inbound and outbound opportunities, kind of a thing. Yeah? So that way, I think it's just a start. From here on, it's going to go up multifold.
And just to, of course, add on to Nishit's taxation was one. Secondly, I think people used to, because it was an evolving ecosystem, people would take time to kind of adapt to understand what it is. But one could say that Gift City is probably the safest and most secure way now to invest into India if you're someone looking to invest from outside the country, which was not actually available. So, and now it's a clear fact. People earlier used to take time to get kind of warmed up to the entire ecosystem. But one could say now,
Why do you say it's a much safer and secure option for outsiders? Matlab, how does it compare to, and I've been meaning to ask this question, but how does this compare to, earlier structures that used to exist through Mauritius or Dubai?
because we have our independent regulator, which we spoke about, right? Who regulates all the activities of all the asset management companies, wealth managers. And the Mauritius route, of course, would be through various different kinds of routes. Here it's this unified regulator who's regulating all of the activities, which safeguards all the investors, regulates all the entities within it.
Got it. And also on the tax front, you mentioned how earlier money used to come in through tax havens. First of all, why were they called tax havens? What was the tax advantage there? And when you said that due to WhatsApp University, there's misinformation that taxes don't really apply here, but that's definitely not the case, as you clarified earlier. How does that compare to a Gift City structure?
I think tax, as I spoke earlier as well, taxation is same everywhere. So suppose an Indian investor investing into a Singapore fund or maybe a Mauritius fund, he still have to file for his returns in India. He has to pay his taxes. So there is no way that you can escape this, that you cannot escape two things, death and taxes. Yeah. So that is always there. So those countries were called as tax havens is because a lot of family office were also setting up their structures out there. So their incomes were global. They used to get those monies out there and then invest. So kind of thing they used to save on taxes. But otherwise, I don't think there is any issue. Today, I think globally, all the countries have become quite strict. We have got FATF as well. As soon as you do some kind of, you get into a grey list or a blacklist. So a lot of countries now don't want to kind of get into all those things. And each individual country is also asking us for a lot of data.
So if I am a individual who's earning a decent salary in India and who wants to, let's say, have an exposure outside, this tax haven tag doesn't really benefit me because I can't evade those taxes regardless.
No, absolutely.
I think that's all the questions I had. If there's anything you think that I missed asking about Gift City that would do justice to the audience, the floor is yours. And then after that, maybe we can wrap up.
I think, Kashish, your questions were pretty comprehensive. So yeah, we have covered most of the things. Yeah?
Perfect. Thank you so much for your time, Nishit, Ankush. It's been a pleasure. Looking forward to do more of these.
Thanks, Kashish, for this very interactive session. Yeah, we look forward to doing more of these sessions. Yeah.
Thank you very much.
Thank you.